Hey everyone, it's Chris from Solstice ATR. I hope everybody's enjoying this long weekend. We're going to talk about the overall market. You can find me on Twitter, Instagram, Discord, YouTube, and you can check us out. Remember, we use this adaptive algorithm for our own trading. We're not a broker dealer. Our past performance does not give us any indication of our future results. Make sure you use it at your own risk, and data may not be copied unless requested from the website, and check the policy or give us a call. Remember to smash the like button for this video and hit the subscribe on YouTube. It's for free. And on a weekly basis, we give the overall market review as well as what's going to happen maybe in the following week. Let's first remember this is Memorial Day. Remember the people that passed away for us and gave us our freedom. Remember them in your prayers, whatever you like to do. Let's go to the next slide. I have, are the stock markets anticipating a bull run or a recession? Keep an eye on these sectors such as XLK technology, consumer products, the bond sector, the short-term bills, and so on. I'm not going to go in detail of each one, but I want you to take a snapshot of all these sectors, look at them. Odds are favoring that the debt ceiling will be resolved. Economic data holding up, which is good, but we have still the Fed policy, which is the wild card with inflation, if they're going to increase interest rates in the following week. Plus, we got the unemployment rate. Pay attention to the charts and don't be biased. This is the weekly on the SPX, which shows the 116 simple moving average, and we just barely crossed it. We have not cleared this gap yet on the S&P, and we have the August low high of 2022 in order to clear. We are in a linear regression uptrend. We cleared the downtrend. We were range bound for 5 weeks, and this week we broke up a little bit. So we don't want to have any ego. Trade, be fluid with the market, and don't be flexible because you can break. Focus on the probability. Don't be biased and maximize your entries and exits by understanding where the levels are using Fibonacci's. Let's go to the next slide. And what I wanted to show here, do charts align with a bullish or bearish narrative? Remember, there can be small drawdowns. And this week, because NVDA reported very well, the NASDAQ rallied quite a bit. We had 2 candles back to back, week to week, pushing higher. These are called 3 soldiers. We look to touch this gap. There's a small gap here on the weekly or the daily chart. We tapped into it. We looked above it, came back in to close right under it by 10 points on the NASDAQ. This is the historical rate of return on the NASDAQ. Medium average after 1 year is 12%, 2 year 35% compounding, and 3 year 48%. But the drawdowns, remember this is for illustration use. You can have the bull scenario as well as the bear scenario. We can have an average drawdown of 94 days, which is about 8.23, and a medium drawdown of 63 days minus 7%. Remember, we're not biased. We're going to trade what we see. The NASDAQ has rallied compared to the small cap as well as the Dow, and we're going to trade what the charts offer us, take it day by day, and pay attention to the technicals. Remember, we had NVDA this week report on Wednesday. The expectation were way above what the earning report was expecting. We got a $7.2 billion above what the forecast was. And there's 2 guys, which is Matt Myers and Christopher Rowland. He said, well, maybe NVDA is like the gold rush. And, you get the shovel, you dig in, and you get more returns. We're going to pay attention to these technicals in the gold sector, the US dollar, inflation, the VIX, as well as some of the ETFs in the overall market. Remember, this was last year's range from high to low. This is the Fibonacci extension 123, 138, 150. We missed the 150. Pay attention to the 38 and the 23% because this is a very important area that NVDA has to hold. In order to continue higher, it has to touch the 50. If it doesn't, touches it, looks above and fails, this will be a short coming back to the 123, 120% back. Look out for the prior 2020 highs of 2021 area. So let's go to the next slide. This is our website once again. You can give us a call, give us your commentary, and let us know what you think. Let's go to the first slide. I have GLD, which is the ETF for gold, but this is the micro GC, which is the futures in the small micro. Instead of using GC, I have a lot of PIBs. I use this one. You can see in the prior year in 2020 where the highs were. 22 was range bound inside. 2021, 2022 looked up, almost double top, failed, came back to the November lows this October, rallied back up. And in January and March, when we had the bank sector failure in the San Francisco, we came back in, rallied back up, almost had 3 tops, came back to retest. Pay attention to the F3 and the 18 simple moving average. Worst scenario, if we get a drawdown because it is in a bearish on the weekly chart, do we come back all the way to F5 and reverse, or do we hold F3, reverse back up and get a cut in this wedge and go higher to break out the prior 3-year highs, which is the 2020, 2022, and 2023? This is our high. If it fails, then it is a tell that the semiconductor, the chip manufacturers are looking for gold, to make chips. Is there going to be a slowdown, or is there going to be more anticipation into the AI, into the robotics, and in the car manufacturing and stuff? Pay attention to gold. And let's take a look at now the semiconductor. I'm going to use 2 of them. Global BOTZ, and this is showing that it's starting to come back up in the sector, and we have filled this gap. You can see it, and this was the gap between these 2 candles. Does it continue to clear this prior high in March in order to continue back up and fill this section here? Let's take a look at one more, SMH, and I did use these ETFs to show you that the semiconductor industry has done very well. If you consider this was the prior year downtrend, we had the shoulder, left shoulder, the head, the right shoulder. This was a January low. You can see where it was. We had the rally. We had the bank failure in March. Then we reversed. We kept the 18 SMA holding us up. In the last 2 weeks, the semiconductor rally. Pay attention to the sectors such as Apple, Google, Microsoft, Meta, Netflix, Tesla, and so on. Let's go one more. Take a look at now the BIL. This is on the weekly. BIL, this is the short-term bonds. I know you can see that zigzagging. What we want to do is go on 3-month, because the people and corporations are starting to spend money. We can see that the short-term bonds, every time they mature, they reset, they mature, reset. So there are people that are investing in their businesses, trying to expand and so on, to keep going, even including the inflation and what's going on. So pay attention to that. We're going to look at the American dollar next to the Japanese USD/JPY. We can see that the Japanese and the US dollar started to crawl back up. Pay attention to that. And the AUD slash, not JPY, I'm going to use USD, okay? The American dollar, because the American dollar has been starting to rally. You can see because the Australian are into mining, agriculture, tourism, and stuff. Is there in the mineral such as lithium, batteries, mineral mining, gold, and and other stuff. Is the dollar a little bit weaker compared to the US dollar? Yes. So let's take a look at the US dollar, USD. You can see that the /DXY, because I keep forgetting that they changed that on the TOS platform, $DXY. You can see that on the weekly we were in a downtrend. This was this year's high. We came back down on the daily. We baselined for a couple of weeks. We got a rounded bottom, and I said, pay attention to this. And are we going to clear the 50%? That 104.7 is a very important area. The monthly should be down here, but I still have the February here. I did not move it to the April level, but pay attention to the dollar. Let's take a look at now VEA. Oops. VEA. This is the developing countries in the global markets. You can see it had a little bit of a reset. We are below the 50 simple moving average, which is the yellow right here. In order to run back up, pay attention if we can clear that 61.8 to get back to the 78%, or do we fall back in the range of the 44 and fill these two minor gaps here before the rally back up in VEA? Let's take a look at the SCHB. This is the Schwab broad market. You can see that we were range bound in the last 5 weeks here, and in the last 2 days after the Wednesday reset on the Fed announcement, we had the Thursday gap up, do a doji, and a rally up on Friday. Pay attention to that overall broad market in Schwab account. You can take a look at AGG. I'm putting all these in there to show you that the interest rates in relationship to what maybe the Feds want to do, pay attention to that. And I want to look at the small cap IWF. The IWF, as you can see on the daily chart, is way better than the IWM or IWN, the value play in the small cap. You can see that there is a rally in the Russell 1000 gross ETFs, and it's giving us a little bit of a hint because this was the August high. You can see it. This is a very important area. We filled this gap here. There was a little tiny gap here, which we already filled. We consolidated, looked above, fell back in. We got this gap here, and we had the rally, correct? So more importantly, we have to hold this area here in order to continue higher in the small cap. Let's go now to one more ETF, and I'll go to Apple and I'll do some futures. I'm going to go to IYM, and we can see in the overall U.S. board market trust, we fell back down a little bit. We have three bottoms. This is very important that those three bottoms hold. If they don't, you pay attention to this consolidation here before the break. Look above, fell in, tried to look up, tested it, fell down, looked above, fell down. This area is very important that this section here holds in order to continue back higher, and pay attention if we end up retracing a little bit in the overall broad market. Let's take a look at AAPL, Apple, showing good strength. This is the annual chart. We are looking from the last year, August, we have cleared it. We are in consolidation. Does it hold here in order to continue to hold the 170.50 in order to continue high and get to the 182? Remember, Apple on the 3-year weekly, it can show you where the prior high was for the January. This was the March, February. Then this is the low in June. This is the August, which we cleared. We fell down. This was the October before the November. This is the December low. We had that double bottom. If you look at below the 50% or the zero line from the prior year Fibonacci, we looked up and we continued. We consolidated here for a while. We've been grinding higher. In order to Apple to continue higher, we have to break up and clear the prior March 28, 2022 highs in order to continue higher, or do we consolidate in this area before the run up? That's Apple. Let's take a look at Google. I can use Google to show you the differences because I have the Fibonacci's from the prior year highs to the low. We were in a linear regression downtrend. We did hold the 250 SMA, the 200 SMA. We're crossing the 18 and 5. The 18 and 50. This is a bullish cross. We need to hold where? The 117 area in this consolidation, 114 in order to continue higher. This is the 61.8. We looked at it. This is the annual high from prior year to the low. You tested the 61.8 twice, but you closed under it. Pay attention if we can break through this area here, because this was the January, this was the February, this was the March low of 2022. This was the breakdown of it. In order to clear it, we have to clear this candle here in order to run higher in Google or GOGG. I don't use it, but I'll show you how it looks like. There it is. Let's now go to the NDX, NASDAQ 100. You can see in the NASDAQ how well it is, and it is in a linear regression uptrend. We have crossed the 18 and the 5. They are holding very well. That 18 should be a very strong area, and you cleared the 116 simple moving average, this minor gap here. We cleared this gap, tested it, fell back down in it, and we closed 10 points below on the NDX. But if I look at the micro NQ, it'll show you the same. Oops. Micro NQ. You can see where the micro NQ is as well. It is on that linear regression channel, retesting that area. In order to run, we have to clear this consolidation and a reset on that prior year. Let's take a look at now BTC, and I wanted to show BTC for a little bit. You can see there's this gap here on the weekly chart, but we are in a linear. We'll get rid of this midpoint here. I put it in there last time. You can see that linear regression uptrend and downtrend. I did those channels myself, and I put a target up here and I put a target down here. We're still in consolidation in a small reset. Pay attention, this wasn't the weekly activated, so we're going to move it to where this area here, correct? So this is the weekly. We got to pay attention to these 2 weeks. These are dojis on the weekly BTC. If I go to the daily, what are we doing? We are still in an uptrend on a linear regression, but that midpoint was lost. Do we find support on the back of this area, or do we break out the 1850 to run to the backside of this upper oval and the weekly candles up here? Because this is day 1, day 2, day 3, day 4, day 5. Then you had day 1, day 2, day 3, day 4, day 5. We had 2.5 weeks, let's say call them, 15, 17 days, range bound, trying to make a decision if we continue higher and we hold this area, or do we fall back down? I'd like to see BTC going back up. Okay, everyone? So let's go now. Take a look at the micro ES. And in the micro ES, this is the S&P 500. We can see from the April range after the March rally, we've been range bound from April all the way to here, trying to break out. So if this candle breaks out and we have cleared this candle, and we cleared this candle here, which is this little area here, do we continue to the upside of August 16, 2022 highs in order to run up, or do we hold the 50 SMA before continuing higher? Pay attention to what the charts offer you. And if I go down to a 4-hour chart, we're going to go intraday. We're going to do 30 days. Okay, everyone? So I'll show you how to set it up. And this is a 4-hour chart. Okay, everyone? We're going to do 4-hour. And in this 4-hour, we know our weekly ranges where they are. This is a gap down here because this is the overnight. I usually have the overnight. These are the gray areas. And what I want to do, this is the last 5 days. Day 1, day 2, day 3, day 4, day 5, correct? This is the high and low for the week. So what I want to do is zoom in here. I'm going to go get a measured move just for setups without using a volume profile. Where is my low for the week is down here. Where is my high for the week? Actually, it's here, not the prior week here. This was last week's range on Friday. What I do, I usually anchor it from Sunday through Friday every week. I edit the property. I extend it back till the 20th. Oops, we'll extend it back, to the 21st. This was what day was it? The 21st on Sunday. Push OK. And we can see that the range for the week was from here to here. Where is my 20%? If I want to create a box, I can create a box and say, okay, this is my 20% for the highs and lows for the week. And this is my range. What I can do is extend it out, duplicate this drawing, and extend it to the top. This is a very important area for the small cap, or the S&P 500 to hold in this range in order to continue higher. This is an 80% high and low. If I look at the extensions to the upside and downside, where are my extensions? This is my 25, which is my 20 here. My 38 is here, and my 50. And my 61.8 is here, and my 80% is here. If in order to market to run up, duplicate this distance, you take it to the top this way, or you take it to the bottom. But the most important thing in S&P 500, it has to hold the 4190, 4178 in order to continue higher and run up. We can create a rounded bottom, a cup here, like here it did this cup here, and continue higher. But if it breaks out on Tuesday and run up after Memorial long weekend. Remember, the US market is closed, but Sunday the market opens up. International market on Monday in the European zone are open. So they're going to trade the commodities. So pay attention if it creates a shoulder to continue or you get the breakout to the upside. So I hope this video was very helpful. You can still check us out at Solstice ATR. You can get in contact with us, give us your commentary, and let us know what you think. Over and out.